Good morning, everyone. Thank you for joining us today. We're here in this panel trying to talk about the transformation of exchanges. We've got Ola, she doesn't need any more introductions. Ola, Bit Oasis, Dubai. We've got Yehia from Rains, based out of Bahrain. And we've got Josh, Hobie Global, used to be based out of China. Now you guys moved to Singapore. We're going to get back to that point later on. So, Ola basically went through their business model. What about you guys? I would like to hear more about your business models and how you differ in terms of, everyone is an exchange, so.
Yeah, sure. So Hobie Global is, I think fair to say, probably one of the older exchanges. Well, the older that you have out of the bunch. We're 5.5 years old, so we're pretty ancient when it comes to exchanges. Originally, we were founded in China. And over the last 5.5 years, what we've done is expand our retail roots to cover other asset classes. So we have a derivatives business, we have a venture fund, we have a university in China. What we've really done is diversify the key and core scope of our business activities. And that is as much client-driven as it is, user-driven and internally. We've seen numerous requests from our client base to expand the scope of products that we offer. Internally, we've had great ideas about how to innovate in other sectors that we're currently not in. So what we've really tried to do is kind of catalyze our growth and enter new areas. So although we've been around for about 5.5 years as a company, I think we really feel that we're really at the beginning of that journey. And hopefully it's going to be another 5 more years of innovation.
Perfect. Hi, everyone. My name is Yehia Badawy, co-founder and partner at Rain. Thank you, Noura. And I'd like to thank the ECOH team for an amazing conference so far. It's a pleasure to be here. Rain started in 2016. It was an idea between myself and my 3 other co-founders who we all believe that regulation is a key catalyst for cryptocurrencies, and coming from a market where regulation is quite heavy, we felt that for this idea to grow, we wanted to take a more regulated route, and that's what we started doing. We first spoke to other regulators in the region, in Egypt and in Saudi, and this was around early 2016. So it was a little early for the region. I would say, and we weren't very welcome in those conversations. So we actually managed to get a meeting with the Central Bank of Bahrain in early 2017, and we presented the idea of Bitcoin and how it works to a team at the Central Bank of Bahrain, and they were willing to listen to us, and we've had a great journey with the CBB ever since. And they told us about the Regulatory Sandbox program, which is a program that they initiated in September of 2017. And it basically gives regulators a chance to experience what the business model is like, what are the risks involved, and give companies like ours a chance to operate while being regulated. And we've been in the sandbox for over a year now, and as Ola mentioned, the consultation paper came out December of last year, of 2018, and we're expecting to see the full regulation come out within the next few weeks, and we'll be applying for that license for sure.
We all know that blockchains are universal, so why the regional barriers? And you're working with the UAE regulators, you're working with the Bahraini regulators, you're working probably with all Asian regulators. So how come we don't have a universal exchange where anybody can just start trading on it?
That's a really good question. In an ideal world, I think if we hark back to maybe the earlier days of blockchain and cryptocurrencies, there was this utopian vision that everyone would be able to access these similar services from anywhere in the world at any point without any rules. But I think that kind of utopian vision has perhaps not been grounded in reality. And really what we've done as a group is try and borrow the best of the good regulation that's out there. And when I say good regulation, I really feel that that's something that we've only seen in the last probably year and a half, if that. And for our business to succeed, bearing in mind Huobi itself is in 17 different countries. We have clients in 130 different countries. We've got 6 million users. To be able to serve those clients in the right way, to be able to protect them from a consumer interest perspective, to be able to make sure that they really have the full scope and ability to have the full scope of services that we offer, we have to follow the local law. And because of that, our journey has really taken us to multiple licensed entities and vehicles that are licensed or about to be licensed, just so we can offer the services that we want to be able to offer to our clients. So I feel like this gravitation towards a more regulated space is really a sign of things to come. We're very pro good regulation. Good regulation works well. Bad regulation certainly doesn't. It stifles innovation, and it definitely is to the detriment of this industry. But what we're increasingly seeing, at least in our region, where we're in APAC and we're very strong in Europe as well, recently we made a venture into the US. What we're increasingly seeing is the regulators engaging. So they're listening, they're learning, and they're working with us. And I think that really is the key for us as an industry to move things along in the right direction.
Yeah, I'd like to actually add more to that as well. I think the technology is global. The technology is there for anyone who would like to build applications on it and build products that would be extended to consumers. Consumers obviously sit in different jurisdictions across the world, and every consumer base that you would serve, specifically if you're building financial services products or exchanges, essentially are considered as part of financial services. That's where the localization obviously takes place, and that's where if you're serving certain consumers in certain jurisdictions, you have to comply with the local laws. And obviously, when we started from day one, we do full compliance. We abide to all the different AML and compliance laws for every jurisdiction that we serve our clients, and we work very closely with those regulators that even though there aren't existing licenses for crypto asset exchanges, we still explicitly say that this is basically how we do it. This is the banks that we work with, the local currency that we deal with, et cetera. So that one is important because even though the technology is global, the on-ramps and the off-ramps, and primarily I'm saying here exchanges, aren't. They are considered companies that serve certain user bases where there are jurisdictions and laws that they need to abide with. So that's sort of the difference. The difference is that it's not really the technology; it's basically what you're building with that technology and what sort of products or platforms that you're building with it. So.
Yeah, sure. I'll just add that we're bridging the gap between the old world and the new world, or a potential new world, and it's always tough because you have to deal with the dated infrastructure that exists, and then you have this completely new idea that's taking off, and it's super fast, and you have to manage the relationship between both worlds and make sure that things go smoothly.
Coming from an old world, technology, let's say, exchanges have always existed. What different things are you doing in terms of an exchange? To accommodate these new technologies, an exchange is an exchange. You're trading two items with an exchange is basically a middleman. So what changes are you actually doing in that scene?
Go for it.
Yeah, so I guess in our case, we are a centralized exchange. We're certainly not saying we won't decentralize at some point. We've launched something called the Huobi Public Chain to really investigate and get to grips what it means to go decentralized. So as of now, and as of when we started in 2013, we were centralized. And that is because it works absolutely fine. It works well, it's tried and tested technology. The systems infrastructure is everything to the integrity of the exchange. So we know that we can operate a scalable, highly performing exchange, multi-jurisdictional, using this centralized platform. So in that sense, the technology behind the scenes is very frequently exactly the same that will run for example, an FX trading platform or an equities marketplace. Now, the difference is the asset transfer piece, where you are going out of the exchange's infrastructure, the ecosystem, where you are sending, for example, Bitcoin to another wallet. It's the connection between the blockchain infrastructure and incorporating that within this almost pre-existing financial markets technology. That's where things get really interesting, because it's the nexus between the two. And it's not something you can avoid. They're very much symbiotic in terms of cryptocurrency exchanges, but there is absolutely a core piece of blockchain technology that is embedded within any digital asset exchange. And in that sense, I think that is quite innovative to see how well it works and to see the real scope of business that people are doing, the size and volume of transactions that are going through these systems on a day-to-day basis. That's a real success story. I think over time we'll see different models evolve as well. People are slowly looking into how to decentralize their exchange. And the first mover that does that very well will hopefully succeed and show a new path. But until then, you know, the centralized exchange we run, we're very happy with.
So we've got the China Internet Financial Association stating that the systematic risks associated with crypto trading platforms are market manipulation and money laundering. I mean, you got your AML forms, your AML databases, so probably that is kind of covered. But what about market manipulation? The pump and dump schemes, the two parties trading, and
I think it's we view ourselves as a security company first, because part of offering this service is making sure that you have a stable and well-run system, and the security of the marketplace itself is also another concern that people have. We've seen what you mentioned, you know, wash trading and market manipulation happen, especially in certain markets where that was very prevalent. There were no regulations, people had 100-to-1 margin, 0 fees, so it was quite a different time. I think the industry has matured since then, and as a company, Rain, we view the security of our system and the integrity of the trading that happens of paramount importance for us. So we implement whatever techniques, and we are continuing to innovate on them to make sure that none of that happens on our system.
Regulators across the world, when they were looking at exchanges close to probably 2013 to 2014, the biggest risk that they've seen was AML, KYC, the potential of like money laundering, you know, terrorist financing using blockchains. And I think that risk is real, and the emphasis that we put on it is real as well. I think after this price spike that happened in 2017, and also seeing those exchanges trading in billions a day, obviously that's where that risk became more prevalent. And with the introduction, obviously, ICOs and some of the very obvious, clear pumps and dump schemes around you know, tokens that don't really have any significant value or potential to grow into applications, obviously that created another environment for market manipulation, which regulators are very, very seriously looking at right now, and some of the new regulatory frameworks as well that went out. Not only they're focusing obviously on AML, KYC, cybersecurity risks, but also market manipulation and market surveillance is a key pillar in those regulatory frameworks. So that's what we see in the framework that went out by Abu Dhabi Global Markets, where market surveillance and market manipulation is a key element to have as part of running an exchange, and that's also the work that we do ourselves as an exchange. You know, be it front running, wash trading. There's like various of market manipulation acts that we would surveil for, and I think it's for the better of the long-term benefit for the wider space to adopt such market practices, because at the end of the day, you want to protect the consumer and sustain a healthy market condition in the market.
I mean, wouldn't that be considered some type of conflict of interest? I mean, you're the exchange, you want the revenues to come in, you want to provide the volumes and the liquidity, and at the same time you have to conduct surveillance and, you know, kick people out, probably ban some traders from your platform. I mean,
yeah, but at the same time, obviously, we have a number of controls that we have in place as well. that I think serve a legitimate need. There are real risks around running a market, running a financial market on crypto, where it's in early days. It's still very nascent, and the liquidity is not that high compared to other markets. So when you've got those pumps and dump schemes happening, they really affect the retail consumers. So in general, I think this is one of the procedures that exchanges need to take seriously. And then obviously mature as this industry matures. So I don't think, there needs some sort of proportionality that needs to be exercised, obviously, when having those controls in place. But I do think that's a viable control to have in place, and also a risk to continue monitoring as this industry grows.
Yeah, just to add to that, I think, what we've seen in Europe and the Americas over the past year or so is a clear understanding from exchanges that operate there that, they may not be obliged by law to incorporate existing, for example, AML and KYC requirements into their exchange yet, but they've all come to the realization that they should, and if they haven't, they better go on with it, because ultimately it's coming down the road. So in Europe, we have something called the Money Laundering Directive 4. That didn't incorporate digital asset business, but the Money Laundering Directive 5 does. So every operator of an exchange in Europe is obliged by law to have robust AML and KYC procedures. So everybody knows what the state of play is in Europe. So as an organization that's primarily based in APAC, we put in place MLD4 compliant AML and KYC months ago. And the real reason for that is, if we get it wrong at some stage, if we commit a breach and get accused by a national regulator of doing some kind of nefarious activity due to a breach of our own systems, it's to the detriment of us as a business, and it's to the detriment of our users. And I think as exchange operators, we have a real obligation to help this industry grow, and by flouting legislation and rules, and by not gold plating where we really should be gold plating as it's in the interest of the consumer, it's really to the detriment of our own businesses and to the detriment of the consumer. So I think all the kind of controls and consumer safety practices that we're seeing in traditional markets are absolutely appropriate in the crypto markets. And what I have found quite encouraging is seeing other exchanges that are as large as Huobi and other exchanges that are much smaller really taking the lead on this and implementing, for example, market surveillance technology, which is very costly. It's very difficult to integrate with a legacy system, and it requires a room full of people to really analyze the data outputs that these systems, produce. So it is no small investment to do this, and to see people doing this and leading the charge, even though right now they may not be obliged to, I think is a really positive sign.
I guess that's another business opportunity. Third-party surveillance company. Build one maybe.
Yeah. All of the existing financial markets ones all knock on the door and go, "Hey guys, we do this now for cryptocurrencies." So
there you go. All right. Will we ever see a convergence between traditional exchanges and crypto exchanges?
A convergence. I think you see NASDAQ always talking about, at some point, them becoming a crypto asset exchange. So I think that's inevitable. I think year over year, the crypto asset market is proving to the wider financial markets that it's not going anywhere. It's, in fact, growing. Obviously, even though right now we're going into a bear market, you do see maturity in the market in terms of regulations, in terms of institutional adoption in more mature financial markets. So there are definitely signs that there's a wider integration that will happen with the crypto asset financial market and then traditional exchanges or traditional players in traditional financial markets. So I think in the next 3 to 5 years, it'd be interesting to see how crypto asset industries would grow further and further. And I'm quite optimistic. Obviously, there are some hiccups and ups and downs that this space will go into since we're still in the early days. But I think all the signs are there that traditional exchanges will also become crypto asset exchanges, which is an interesting play for us as exchanges in the market, and what does that mean in the competitive landscape. But at the end of the day, it's inevitable that this market will grow further and further.
Yeah, I think if you look at the securities token space, you're having an increasing number of sophisticated, for example, equity marketplaces, which are called MTFs in Europe, multilateral trading facilities, that have the right to permit any kind of multilateral trading of a security. You're having them really walk into the space and go, how do I do this? Can we do this with you? Can you advise us? So they're all very much sniffing around this space. And at some point, I really think that they're going to make a pretty bold move. And the first one that we saw at the back end of last year in the UK was an exchange called Aquis. And Aquis is one of the most disruptive equities trading marketplaces in Europe for equities trading. And they recently did a joint venture with a company called Archax. And Archax are only going to do one thing, and that's tokenize equities. So using the umbrella of the regulation that this well-known Aquis market has, very soon they'll be able to offer a multilateral trading environment in securities tokens. So this is the first use case we've seen, and I think that theme really is going to continue. And I think it's a great thing because from our perspective, we see it as a real challenge for our kind of exchange to move into the securities token space. And inevitably, there might be a collaboration there with a traditional player that probably makes the most sense. So it's certainly a theme that I think this year will probably increase.
I think it's, again, the convergence of the traditional or old world and the new world. And even as early as 2014, NASDAQ invested in Coinbase. So that just goes to show that they already were looking at this opportunity and looking to see how to capitalize on this opportunity. So I would say, as a cryptocurrency exchange, we're looking at new opportunities, and obviously this is one that's been talked about quite often. At the same time, traditional exchanges are looking for new opportunities with e-trading becoming more prevalent. The margins are lower and lower, and there's more pressure on the exchanges to look for new opportunities, and this one is up for grabs.
All right, so let's get back to regulations, since, we all know regulations could make or break a business. How close are you in terms of working with regulation, in terms of educating them? At least from our part of the world, we know regulators are not really up to par in terms of developments in technology. So how are you working and shaping their decisions, basically?
So on our part, since the early days, we've been interacting more closely with UAE regulators. So that's the JFC, ADGM, ESCA, and Central Bank of UAE as well, which have taken a backseat right now, and they've kept it to the other, I would say, free zone financial regulators to tackle that part. And we've been working with Abu Dhabi Global Markets since early 2017, actively, obviously, on the framework and all of that. And we're in the process of acquiring those licenses. I think there are also a couple of other exchanges in the pipeline as well that are going ahead with that license, and it's been an interesting journey. I think the licenses that they put together, including this license from the Central Bank of Bahrain, which we've been also working closely with since 2017. So the licenses that put out in the licensing framework are on par with what other international jurisdictions have. And the level of sophistication that those regulators have, I think, in the region is quite impressive. And I think that's why I'm personally optimistic and positive about the adoption of this technology here in the region, because I think you see a higher level of sophistication among regulators in terms of how they're looking at that technology and then eventually how they regulate these players. Now, I think when it comes to obviously execution and then how the regulators on an ongoing basis would support this industry, obviously that's something for us to kind of further see and assess. But given the fact that the initiative is there, the resources are there, and the knowledge as well is there among the regulators. I'm definitely optimistic and positive about the industry.
I definitely agree with Ala, and I think our relationship with the Central Bank of Bahrain started out very early on, and I would say this might be a little bit biased, but I would say they're a model regulator because they are willing to listen, they are willing to give us an opportunity, and with the Sandbox program, they were very actively in discussions with us, monitoring our progress and also listening to us and listening to our recommendation. Given the expertise on the team, they were willing to understand more from us how to best apply this. And then with their recent consultation paper, I would say it's on par with all the international standards and all the international regulation that's come out recently. So it's a very optimistic view of regulation in the region, and I hope other central banks follow suit as well.
2018 for us, I think, really was the year of regulation. And what that really means is throughout 2018, we worked on getting licensed in Australia, so we're AUSTRAC licensed. We have a money transmitting license in the US, which allows us to take fiat deposits, so fiat to crypto activity, that's called. We are one of the 16 licensed exchanges in Japan. So we're regulated by the Japanese Financial Services Agency. We are part of a self-regulatory organization in Korea. There's about 17 of us that have all bandied together to self-regulate. We are regulated as of last month by the Gibraltar Financial Services Commission. So we're a Gibraltar DLT license operator. And that kind of, I'd say, jurisdictional spread allows us to really service most of our client base. And the experience that we've had with each of those regulators has been completely different. So when we were going through the Japanese licensing process, they very much had formed their view of what this should look like. What they did was take the existing regulatory framework and adapt it as they see fit to the market. There was a little bit of back and forth. We did talk to them, they did listen, but they very much, from a sophistication perspective, understood what needed to be done. In other markets where we got perhaps the second license to be issued in Gibraltar for a brand new license called the DLT license, before that whole thing happened, we had been in open sessions with the regulator to talk about what our business looks like, how does it operate, how does value get transferred across the blockchain, how do we store assets, how do we monitor suspicious transactions, what kind of tools should we be using, down to the most granular details. So we work really hand in glove with them for them to understand our business and every other cryptocurrency exchange that was around that table, their business as well, to get them to a point where they really feel like they understand what the business does and why the legislation that they introduced is appropriate for this. So we've had really different experiences with regulators, but overwhelmingly they've been quite positive. I think the main challenge we've had as an organization, as a global organization, is the absence of regulation leads to an absence of certainty and a real reluctance to invest. It's very hard for us to invest in a new market where there is a complete lack of regulation. So where we are seeing regulators responding in the right way, listening or wanting to understand how to build a legislative process that captures what we do as an industry, we think that that's a fantastic thing. So, all in all, very different experiences with regulators, and a lot of it is very collaborative, and in other cases, they know exactly what they want.
Great. Let's move on to security of your platforms. The past few days, I've seen news of some crypto exchanging touting around their compliance certification with an audit firm from this side and another audit firm from that side. I'm guessing these seals are to, assuage the investors, shall we say. What are you guys doing in terms of securing your platforms from either attacks, from manipulation? We've already went through that. Let's talk about the attacks mostly.
So obviously security is a very important part of our business as an exchange because we hold people's assets. their data. We are a platform that also deals essentially with money and transactions, and that's very valuable for our customers. So we focus on security of our wallets, security of the storage of our tokens, as well as an exchange. So we run multi-sig wallets for our customers with segregated key storage to enable, obviously, users to securely store their assets on hot wallets on our platform, and then our cold storage as well, where we have the majority of our customers' funds. Even that is segregated as well. And the last thing that we do is obviously continuous audits on our platform to make sure that the platform itself is robust and secure for our customers to transact and sign up and store their data as well. So we take security very seriously, and we've got, as part of our tech team, a security team that focuses on that with continuous monitoring and reviews of our platform.
Yeah, on our side, as I said, we've been around for 5.5 years. So, having 5.5 years of a track record where we haven't, and I don't want to tempt fate, but we haven't had any kind of compromised security, we haven't had any user funds stolen or anything like that. The absolute worst nightmare for an exchange is for that kind of thing to happen to it. So 5.5 years of a clean track record, the number one priority we have is continuing that clean track record. So we invest in people that really understand the infrastructure that we have built ourselves. Everything that we have is proprietary. We've built the full stack ourselves. We don't have any third-party software or hardware even that is not kind of working together in the right way. We've really taken a long time for this whole system, this whole stack to be built. So I think for us, we're a little bit cautious about working with third parties, so we try and do most of it in-house. And what that means is we have, I would say, an excellence in terms of knowledge internally as to how to deal with these things. We have regular audits from third parties that look at our systems and our controls. A really important thing that lots of exchanges haven't really done until recently is keep their client assets offline. That's so important because you can be as confident as you want to be about your system's infrastructure, but one day when it goes wrong, you don't want to be caught off guard. So we keep over 90% of our client assets in cold storage, i.e. not connected to our system at any one time. So we really are trying to reduce the exposure that any, God forbid, terrible event occurs, and we know that most of the assets are protected in cold storage. So really, reinforcing what we've done over the years to make sure that we're safe and secure, but also we have an eye on other technology that's coming into the market that may be appropriate. And by that I mean custody solutions, settlement solutions, things that break up the counterparty trading experience that might mitigate exposure risk in some cases. So we're learning. I think we're on a journey as an organization to try and work out which elements of third-party technology to really incorporate into our systems. So there's a big learning process for us, I'd say, in that, but we're all, all ears, we're listening, and, we absolutely can do better, I think.
I think with regulation, there's a higher trust, not just among institutional clients, but also retail clients. So for us, after regulation is diversifying our offering to different client bases, tackling institutional clients. Also, that requires setting up a different infrastructure with more, obviously, investment into custody solutions that are in compliance with what institutional clients also expect, and further expansion across the region as well, and working with more regulators across the region to transcend some of the regulation that went out in some of the Gulf countries to others as well. So definitely focusing on scale and diversifying user bases, and with that, actually, our team has been scaling as well, while other companies has been slashing the workforce. But I think it's definitely promising times here in the region. The other thing as well is with the regulation, further emphasis and investment on our platform itself, our processes, making sure that we have the ability to store the larger funds of clients to serve wider segments of the market, specifically institutional and high net worth individuals, which requires more emphasis on our platform and robustness of our platform. And also increasing the capacity of our exchange and number of trades that we can trade per second, number of assets that we can support and tokens that we can support. So we're investing across the board to make sure that we have a platform that can serve different user bases and different clients across the region.
We've seen a lot of interest peaking from institutional investors in the past year. And one thing we've achieved, and this is actually the first time we're announcing this, is we've gotten Sharia compliance on the buying, selling, and storing of digital currencies on our platform. So we're constantly moving to make sure that we're a local, regional offering that caters to the requirements of institutions. So the Sharia compliance was the first, and we're the first regulated exchange to be Sharia compliant. We're also building our OTC desk and are in developed conversations with different institutions, whether asset management institutions, brokerage institutions, who are exploring how to bring this new technology and new idea to the market. And we have some competencies on the team from that world, and bringing those two worlds together has been something that we've embarked on since day one. And then also we're listening to our customers, so we've had mobile applications out to the retail customers because we're constantly asking for that, so we fast-track to them, and just making sure that we engage with the community as well. So we organize different meetups in Bahrain, in Jordan, in Cairo, in Saudi, and the purpose is to continue educating users and people about technology. So I think regulation will only add more legitimacy to those efforts as well.
Yeah, I think we're certainly not in a post-regulation world. I think that would be slightly misleading to say that, especially in Europe, where we're no way near having what we're used to seeing, which is a pan-European regulatory framework. In most similar services, there is pan-European legislation that allows you to do that activity throughout Europe, i.e. you passport your activity throughout Europe in a completely unencumbered way. So someone who's set up in France can sell their regulated activity throughout all of Europe in a pretty easy and simple way. We don't have that in crypto yet. So I actually think the post-regulation state is pretty far away. I think it's going to continue evolving over the next 6 months to a year, especially in Europe, in the US. But nevertheless, as an organization, we're really focusing on the future from a product perspective. So in December last year, we released our derivatives platform called Huobi Derivatives Market. That is, to all intents and purposes, a futures exchange. We have Bitcoin, Ethereum, EOS, Litecoin, and very soon Ripple futures contracts. Those are in weekly, bi-weekly, and quarterly contracts. So to date, we are just about to hit $30 billion of traded volume. So we were very enthused to see the scale of that growth. So it kind of all ties in with the message that we're all saying here, which is the institutionalization of the industry is happening. The participants on that new product are all institutions. They're all sophisticated traders that have a background in trading commodities, FX, equities. Very often it's algorithmically traded or it's via an HFT strategy. So in that respect, I think the market is really moving in a very interesting direction. And so what we're focusing on is supporting that move. So we're pivoting to an institutional space very quickly. We're improving our product day in, day out. And that includes things like supporting stablecoins. And I'm not particularly plugged in with what's happening on the stablecoin side in this region, but all over the place you've got some really interesting stablecoins being developed and deployed in different markets. And we see stablecoins as an increasingly important tool in the armory for our traders, because it really bridges the gap between crypto and fiat. And in some cases, you don't want to have that fiat deposit capability, and you want people to be able to transfer fiat value that's not a cryptocurrency per se, but it's a stable coin. You want them to be able to transfer that in a frictionless manner through the blockchain. So we think stable coins actually are going to be a very interesting addition to this year's hot topics. And we support that in many ways. We've built an aggregation tool that allows you to aggregate your stable coins and withdraw from them in whatever stable coin you want. So I think on our side, what we're really doing is trying to build out the scope of products. So when hopefully the influx of institutional money starts happening, we're ready to really give them the services they want.
Great, thank you guys. Just one final question directed to Ala and Yehia. Will we ever see you listed on a traditional exchange?
Listed as a company?
Yes.
As an IPO?
Yep.
Wow, I didn't expect someone would ask me this question on the session. Yes, hopefully. I mean, obviously we're a business. We're a funded business by different VCs here in the region and outside. And at some point, as a company, we have an exit strategy. One of which is an IPO. And I think we have a potential to grow $1 billion company in the crypto asset space, focused here in the region and other emerging markets. Yeah, that's definitely in the horizon. Not in the next year, though. You got to give it another 3 to 5 years, I think. Yes.
Interesting question, and that wasn't in the questions that Noura shared with us. So she pulled that one out of the bag. So.
It's Josh's fault.
Yeah. I mean, you're safe. So I think engaging with local investors, and actually one of our largest investors is Blockwater, which is a Kuwaiti fund. And we think that it depends on what is best for the company. We think that as long as we're maintaining our customers' trust and we make sure that we're offering the best service, whatever route is possible, we'll take that. I don't know how to comment on that. It's too far ahead.
Thank you, guys. Shall we open the floor for questions? 1 or 2 questions, max. Yeah.
My name is Aisha. I work at Bergan Bank. I'm on the fixed income side, a portfolio manager. My question is for Ala. What do you think would be the catalyst to push Bitcoin back to the levels of, let's say, 6,000, 10,000? Obviously, I'm an investor at these levels. And yeah, I'll just go for one question.
I don't know. That's the answer. I think the price movements have been very, very unpredictable. And there are several factors that contributed to the price spike. We touched on some of those also in the session. But the straight answer is I'm not really sure. But the answer that I have in terms of long term, hopefully that would contribute to the appreciation of value in any token, is wider adoption and a more solid ecosystem that would support the adoption of this token. And that's the route that I would like as an exchange also to support and the full ecosystem to support as well. Short-term price spikes are definitely driven by speculation and some trading activities that are not sustainable. However, more organic, sustainable growth in price definitely signals an ecosystem maturity and then an overall growth in the value of the ecosystem and those tokens and that are existing in the space. So I hope that answers your question.
Okay, I have a question here. My name is Abdullah Al-Kubaisi from Ooredoo Group. To Yehia, first of all, I'd like to congratulate all of you for all the achievements, and for you in particular for the Sharia compliance. But I want to know what is the hardest hurdle that you guys been through to get such certification, because it's pretty it's doubtful, especially when the value of such cryptocurrency or whatever is not linked to tangible asset. So
there's been a lot of hurdles, and we could spend another couple of hours talking about that. But to be very brief, so the Sharia compliance audit we had was by Sharia Review Bureau, who are regulated by the Central Bank of Bahrain. And that involved a lot of information sharing about our processes, our system, the team's background, and really opening up to them and sharing everything that we do and how we do it. And they actually have quite a strong knowledge base on crypto assets. They were very well versed when it came to different technologies, the difference between what a token is, what a security is, and so within the team that really helped the conversation move forward much faster, because having to educate any partner in such an agreement would take quite a long time. So we were very pleased to work with them because they already had that core competency within the team.
Thank you, everyone. Thank you, fellow panelists. Thank you, everyone, for showing up and listening into our panel. Our panelists will be available if you've got any more questions. Sorry, guys. Yeah. Thank you.